Hello, hello, welcome out. How's everybody doing? My name is Tony Benson. I am filling in for Rob today. I believe he is on vacation. Whatever the case is, they asked me to. What's up, Rick? Asked me to fill in, and I pretty much always say yes. So, because I like doing this, it's fun to come in and sometimes see a little different group of people. I see a lot of very familiar names. So, what's up, Kevin? I know, surprised you, huh? You're like, wait a minute, that's not the right voice. Not the right picture either. It's okay. Doesn't matter to me. Let's get the disclaimer out of the way. I'm not a registered broker dealer investment advisor. I won't give you any recommendations or advice. Everything we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading. Realize I didn't have that puppy on, so. It is cooler today, which is nice. It was 91 or 93 Saturday, I think it was. So it was super hot. Late high 80s, low 80s yesterday. So 90s a little too much. The 80s I can handle okay, but getting into the 90s and 100s is like too much. So, but as I'm getting older, I'm starting to understand the snowbird concept. But yes, hey Helen, how we doing? Yes, Diz. It's only 70 there. Is it huge, super humid though? I've been in Minnesota in quite a few years. My dad grew up there, so I grew up going back to family reunions, and my aunt and uncle had a cabin on a lake. Surprise for Minnesota, right? But it was just the mosquitoes and humidity was always so bad because we always went in the summertime. But it was always nice. I always had a good time. So until I almost killed my cousin. I don't know. He was skiing or something. I can't remember if he was skiing or if he was going kneeboarding, but he showed me how to drive the boat and do this and that. And so I hit the throttle and started to turn right away. And which apparently is a no-no. I didn't know that. I think I was 13 or 14 at the time. But yeah, and he ended up crashing hard, and he was not very happy with me. So, but he didn't tell me that. Don't turn right when you start. When you hit the throttle, you got to keep it straight until you get up. So anyway, but yeah, that was a long time ago. Wow, that's crazy. I haven't thought of that forever. Yes, I've heard that. I know some people in Texas and Florida. We've got a friend in Florida. He used to be in Texas. He went to Florida. It's like, yeah, too much humidity for me. Yeah, thankfully he didn't die. He almost broke his leg though. I mean, his leg was trashed pretty bad, so it didn't break, but it was bruised for a while. So I felt bad. Even that's 30 some years ago. I still feel bad about it, but it is what it is, right? Yep, baptism by fire. But it's only 9 o'clock out here on the West Coast still, so I'm on this is only my fourth cup of coffee, which actually is about max now. So here's what we're coming up. Premium online workshops at Inner Circle the 17th and the 24th. Mastermind group the 18th and the 25th. Trade U the 27th and August 2nd. Inner Circle, the quarterly Inner Circle is July 28th and 29th. Monster Market Movers, July 31st. It is crazy to see we're already halfway through July. Power option plays Tuesdays and Saturdays. Cover call explore on Thursday. That is true, Brenda. I don't need any more energy, do I? Usually adrenaline keeps me going most of the time, but I like coffee. So then Power Hour every Monday today. Trading Coaches Playbook every Friday at noon. Crush It with Volatility is August 3rd and August 7th. Becoming a Pattern Whisperer with yours truly, August 14 and 15, and also August 21. So we'll have some fun in there. We'll always have fun. E-mini Think Tank with Brandon Monday, Wednesday, Thursday, and Vegas Spread Mastery with Sean Monday, Tuesday, and Friday. So yes, and Brandon, you'll be disappointed. You will likely not see the cat today. So she is hiding out upstairs. My brother took off yesterday to go to Whistler with his family and dropped his dog off for the week. So she is hiding out because Emma, my brother's dog Emma, likes to chase her and growl at her. So she doesn't like that too much. She's kind of used to her. I think she's tried to get a little couple sniffs in, but she's not a fan. So she's kind of a loner. She doesn't like anybody. As I pet sat a while back for 2 dogs and a cat, and none of them got along. She hid out the whole time. So, but you can find us all on all the social media stuff. Gap trading stats. This is the proprietary gap stat calculator. It is $12.97 a year with the code Big Gap. So it's only, is that right? $197 a month. That doesn't seem right. That's at the regular price, isn't it? Oh, that's a monthly. Never mind. I'm sorry. I didn't see the monthly annual. So if you do it monthly, it's $197. If you do it annually, that's only $100 a month. That's almost half price. Trade Watch Alert. Was this was in there? Is this I haven't watched Rob's Power Hour for a long time. I used to watch it quite a bit, but is this today, 7/17? Yeah, okay. So this is for today. Workaday. Oh, immediately does them. Okay. Oh, that's right. That's right. Yeah, it's been a long time since I've been in here, so maybe I should have watched them for a refresher, but looks like a bear call or bull call. Bear call. Oh, sell to close, bite open. Sell to close. I didn't even look at this. What I'm trying to figure out what she's doing here. Selling to close the July 21st. Buy to open, or is she rolling it out? Looks like a rollout to me. I don't know. I'm assuming you buy to open and sell to close. Oh, it's a day trade. Duh. Thank you. It was a quick. Oh, she bought it at 6:45 at 9:40. I was getting close to see that. I'm like, wait a minute, something's not right here. Okay, same thing. So she bought it 6:45, sold at 7:45. I know, duh. Looks like a simple call. Yeah. I saw two trades and I was just thinking spread for some reason, but they would have been both green. I just realized that too. They're color coded. So yeah, she bought to open 5 working days at 6:45, sold them at 7:45 in less than an hour, 50 minutes. Nice. Oh, I wasn't even looking at the stuff on the chart. I'm looking down here at just a 5-minute. Okay, there we go. Bought 6:45, sold them at 7 in 50 minutes. Duh. It's all noted right there for me. Yeah. Who said duh? Yeah. That goes to show you right there, you don't have to be very intelligent to trade. Right? So this would be interesting. I don't know. I've intermarket analysis. If you've ever looked at it, that's kind of what we're going to talk about here today. From a big picture perspective, that's essentially what this is. When you look at different markets and see how they interact with each other, it's termed intermarket analysis, and it's been around for a long time. John Murphy's the one who's been credited as kind of making it popular or making it big. It's been done for a long time. But he wrote a book on it back in the old days. When I say old days, I'm talking late 90s. It was technical analysis of the futures market. And that was one of the first, I think that was the first book I read on technical analysis. Somebody said it was the best. It's like 400 pages or something. It's a huge book. He updated it and modified it, called it, technical analysis of the financial markets. But he did a lot of work in there about intermarket analysis. And that's what he became famous for, really. And the Dow theory was kind of basically the start of that, if you will. I guess I don't know how far back you'd have to go to find it. I'm sure it's been done throughout history, but the Dow theory, the old original Dow theory, was that the Dow industrials, and the transports essentially traded in lockstep, right? Because the industrials, they're manufacturing, right? This back when we were an industrial country, right, where we were manufacturing a lot of stuff. So the Dow industrials were the industrial companies that were manufacturing trains, planes, automobiles, and then the transports obviously had to move those goods to the consumer, to the end user. So those two were highly correlated. The transportation companies obviously moving the goods. So if the industrials stopped manufacturing goods, then the transports don't have as much to move. Therefore, the transports would start to slow down. Their profits would suffer. They wouldn't make as much money. And here goes this cycle, right? It's pretty much the same right now. And we're not much different, except that we don't manufacture that much here anymore. It seems like it's coming back a little bit, but a lot of stuff that we get is imported. But there's still that relationship between the transports and goods being manufactured. because they have to be moved from one place to the next to get to the end user. But it's interesting when you start looking at some of these other relationships between different indexes and different commodities. Well, that's what we're going to talk about today, the US dollar and commodities, right? The US dollar has been really strong the last year or two, which is somewhat interesting, but at the same time, it makes sense to a certain degree. But the other weird thing is that commodities have also been strong, which is not necessarily normal. So is the US dollar and commodities, are they correlated? And the answer is yes, they are, but they're negatively correlated. In other words, when we talk about correlation with regard to trading, we're talking about how do they move in relationship to each other. A positive correlation is a zero is the baseline, right? A positive correlation of 1 means that it's a dollar for dollar move. If the US dollar moves a dollar up, then something and whatever's correlated to it with 100% is also moving up exactly $1, right? There's a negative correlation, which is -1, right? So if it's negatively correlated, so if the US dollar goes down by $1 and another commodity goes up by $1, that's a negative correlation. It's exactly 1, right? 1 to 1. It's a 1-to-1 relationship. But negative correlation, it becomes negative. So they're exact opposites of each other. And I don't think I doubt that there's anything out there. I've never looked, but it's either 100% correlated or 100% negative correlated. Because there's always going to be some little variations, right? And things change, and the word I'm looking for, I don't know, doesn't matter. But the part that gets interesting is the strong dollar decreases the price of imports, right? So commodities go down in price, generically speaking, historically speaking. The US dollar going up because the commodities are traded. Obviously, it's a global market, right? Commodities, wheat and corn and soybeans and copper and gold and silver and all that stuff. It's a global trade. And the pricing of these commodities, for the most part, it's priced in US dollars. So when US dollars go up, the value of the US dollar goes up, the price of the commodities generally go down in value. So what does that mean? Nothing. Doesn't mean that we can figure out what's coming next. Maybe I'll get to that in a minute. But if commodity goes down in price, then obviously that's better for inflation, right? And that's part of what this is too, because inflation has dropped off lately. Because as you've seen, gas prices have come down from $5 and $6 down to, well, I think the national average is what, $3.85. It's under $4 here in Washington. We've got an awesome governor and some great politicians that have taken us from we were near the top of the pack for fuel prices, but now we're number 1 in the country as a state for fuel prices. The whole cap and invest thing. So when you force companies to buy, to spend their money on stuff that doesn't do anything, puts money in the pockets of politicians, they're going to raise their prices to make up for it because they have to make a profit. So unfortunately, some of these politicians don't understand that. You want to talk about correlations. It's directly correlated. When a company has to spend more money for their goods, the COGS, right? If you're familiar with manufacturing, that cost of goods sold. If your cost of goods sold go up, your end price has to go up. And generally speaking, if you're manufacturing, your cost of goods sold and the retail price turns out to be about 4 times as much. So if you make a widget for $1, by the time it hits the store shelf, it's going to sell for about 4. So when you go to the manufacturer and say you're going to have to pay more, if you go to that manufacturer and say, you know what, we're going to raise your prices and you're going to have to pay $1.50 for that widget now to manufacture it, then ultimately the price at the shelf is $6, not $4. That's a dramatic jump. When years ago I did just a small little home manufacturing business, it was fun. It was a learning experience. And that's when I realized that it's like every single dollar you put into the cost of the product, you do a big spreadsheet, it comes out to $4 more at the retail end. And in some industries, it's even more than that. But what originally brought this up for me is that, as you may have noticed, the US dollar has gotten weak in the last few weeks. I think it was last week when it tanked big time. And gold was up $25 for the day. Gold's a commodity, right? So US dollar and gold, generically speaking, run opposite each other. They're negatively correlated. not 100, not -1, but pretty darn close. I don't know what the actual stat is historically, but when the dollar goes down, gold goes up. You may have noticed that energy and oil stocks have gone up. Oil went up. It's up at what? Where'd it go? 74.5 bucks a barrel right now. It was at 68 just a couple weeks ago. Last time I looked, I looked at it a week or two ago. I think it was at 68. So a 7 or 8 point jump is pretty solid. But the dollar tanks, oil goes up. So if the dollar continues to tank, is oil going to continue to rise? Probably. We don't know for certain, right? We never know for certain. But that's a weird thing. We'll go to the charts here in a minute and we'll look at the different ones and do comparisons so we can see, because it's been weird, right? Anybody else finding this market to be a little unusual, a little weirder than normal? I don't know how many of y'all been trading, how long y'all been trading, but I started in 2000. So I've been 23 years. So I started right at the peak as the dot-com bubble burst. It was April 3rd and 4th of 2000 when I sat in my first 2-day workshop. And so, yeah, I mean, I had no idea. And all my coaches were used to trading in a bull market. And so everybody was bullish. And that's all we did. We were looking for the bottom, trying to pick the bottom, pick the bottom, pick the bottom. So I scrounged up some money. I was young and dumb and scrounged up some money, threw it to trading account and bought some call options on 2 different stocks. And 2 months later, they expired worthless. And my account was worth like 60 bucks. It's like, what happened here? Excuse me. But yeah, and it was, I mean, not that it's an excuse, but commissions that were 75 bucks. That was the cheapest I could find. So if you bought into something and it didn't move big, especially, working with a small account, which I had $1,000 to work with. So 2 trades, 150, there's 15% of your account eaten up in commissions to get in. So I needed at least a 30% move just to break even on those 2 positions. And of course, being in a bear market, not realizing we were in a bear market, not even knowing what a bear market was at that time, I was just, following what everybody else was doing, and mine went to zero. I don't know what theirs did, but I was just picked off some couple of trades that I thought somebody knew what they were doing. Like, okay, I'm going to do this one. So it was, it's an experience. So no, I did not. What's funny is I've had her, almost a year now, I think. For those of you who don't know, I have a cat. I accidentally acquired this cat. She's a Maine Coon. A lady was giving her away for nothing. And I was like, I hemmed and hawed for a couple of days and I texted her. She said, yeah, I still have her. Like, okay. Didn't ever expect to have a pet. So she comes and roams around in here sometimes. She'll jump up sit on the router up there. So she likes to come say hi. But she apparently likes to eat her own hair too. Because she just sheds everywhere. So I brushed her. I had this brush and I brushed her to get a bunch of it out so it doesn't shed all over my office like it has been. Well, she came over to the brush and pulled the hair off and literally started kind of chewing up on it. And then she swallowed it. Like, that's weird. But she hasn't ever had a hairball. She's never coughed up a hairball. And she's got really long hair, right? And it just, like, especially right now, she's shedding like mad. That kind of irritates me because it's floating all over my office. Maybe I may have coughed one up. Maybe I sucked one down, a little hair. I don't know. So yeah, hairball comment made that. But where was I? Brenda, you distracted me. Not your fault. I was talking about losing all my money. Yeah, so that was an interesting experience, is, going through that. And I learned, it's like, okay, that's what a bear market looks like. You learn after the fact, after it happens, that's what it's like. Now let's prepare for the next one. Which happened in 2008. And it was a pretty good year. It was interesting. A little bit different story. But yeah, talking about how hard the market is right now, because it's really, really goofy. And you'll see when we get to the charts, when we look at some of the stuff, comparing it, it's interesting to see what's going on right now. There's just a lot of weird stuff going on. And there's several people out that have been around longer than I have been. And talking about we're in an unusual time. There's lots of different headwinds from lots of different directions. So, but can we use commodities as a hedge? Historically speaking, we've been able to, right? Gold has historically been a hedge against inflation, gold and silver, precious metals in general, right? What about copper, platinum? But there's the tricky part is, well, we'll get to inflation in a minute, but copper is, and I just learned this in the last couple of years. Copper is apparently one of those that we look at as leading indicators. I think I'm getting ahead of myself, but it's all right. Because copper is used in just about everything we use, right? Especially housing. It's in a lot of electronic devices. It's a great conductor. It's great for its plumbing. I don't know what else they use it in, but it's used in a lot of things. Electric cars, copper there's a huge amount of copper. I think it's 50 or 60 pounds of copper for each electric car, something like that. I heard. Somebody might know if that's right or not. I just remember hearing it's a tremendous amount of copper that gets used in electric cars. So it's historically, though, copper has been one of those things that has led the economy. If copper prices drop, that means the demand for housing has gone down because construction has slowed down. Because obviously copper piping is used a lot. And then everything else we use it in. So, but that's the question, which we'll get to here in a second, okay? Inflation is the next thing that I want to touch on real quick, because what happens if commodity prices do go back up? What happens to inflation? Because obviously inflation has come down. But it's still historically high, and it is still higher than they want it to be, right? It's what, 4.8? Without food and energy, it's at 3, which doesn't really matter because food and energy are two of the big things that we use every day, right? I mean, you have to eat. And if you drive anywhere, you have to have fuel or electricity from somewhere, right? If you drive an electric car, you got to have enough electricity to fill it up to go where you're going. Energy comes from somewhere. So if the commodity prices go back up, in other words, the dollar has been high, commodities were high, but then they've dropped back off quite a bit. Because oil was what, 115, 125, I think it hit. And now it's just kind of bouncing around 70, 75. It's been dancing around that level for months. So, yeah, it's good point. Trip is electricity to run your house, the fridge, and the food, keeping the food. Yeah, the fridge is, I think that's the number 2 or number 3 draw on electricity in the house. I didn't realize that until a few years ago. I remember reading that somewhere. It's one of the biggest utilizers of electricity is the refrigerator, which makes sense, especially if you're getting in and out of it a lot. So, but yeah, I mean, if the dollar drops and commodities go up again, what's going to happen to that inflation? It's likely to tick back up, right? And nobody knows what's going to happen. That's the funny thing is we can look at these and analyze them because a lot of people expected inflation to stay really high and it's actually come down quite a bit, which is good. And in some areas, there's been deflation. And some people are getting all excited. Well, we're having deflation. Deflation is just as bad. Inflation is not good. And when you have dramatic deflation, especially if it's big, that's not good either. Because what happens? Companies, I mean, the companies that we trade, what do they trade based on? Their valuation is based on their profitability. If they have to lower their prices to move their products, then their profit margins get lower, which means ultimately at the end of the day, their bottom line is lower, which means ultimately their stock price is going to go lower. That's what it's all based on. It's all based on the bottom line, how much they're going to make. And granted, there's speculation as to what they're going to make in the future too, right? So it's not just what they have made or what they are expected to make in this next quarter, but they're looking out saying, okay, if you're going to increase, if your profits are going to increase, if it looks like that's the way it's going, then obviously the stock price increases. But if there's deflation and they have to keep lowering their price, then their profit margins stink and their profits go down. Ultimately, their stock goes down. China's going into deflation right now. Yeah, that's no surprise. And they've had a crazy, the real estate market is pretty insane there too. And it's interesting that that's part of the reason, at least this was happening, what, a year ago. They were having somewhat of a revolt, if you can call it a revolt. Because in China, you put your money down in your house before they even built it. And so people were paying, they were making payments on their house. They weren't even living in it. They didn't have possession of their home yet. And then the valuation was starting to drop. So that was the whole, what was the Evergrande? That whole fiasco. But this is one reason that there's a lot of people that think that inflation is gonna tick back up. It's not going to stay down here because the US dollar will go down, which will increase commodities, which will ultimately create higher prices. And the oil price is the biggest thing. That's one of the biggest drivers. right? Because even if food prices go up, you've got to transport those foods. So you have a higher food prices, higher cost to transport those goods to the store, which means the food prices stay high. So that what was the inflation, core inflation was what? Wasn't it like 3 or 3.2 or something like that? But then the overall inflation was 4.8. Yeah, so core inflation was 3, but the overall inflation was, I think it was 4.8, or was it 3.8? I think it was 4.8 is what I remember. I mean, I watch it to see what happens and see what the numbers are, but the market reacts for a day and then you see what's going on. So, Evergrande ship stuck in the canal? Could be. Maybe. I don't remember hearing about that. I think Evergrande was the Chinese development company. Big giant, they're building high rises, selling homes and stuff, and they were on the edge of bankruptcy. I don't remember I don't hear what ever happened to that. Yeah, it was last year sometime when it was they were on the verge of bankruptcy, and I think the Chinese government rescued them or something like that. I don't remember exactly what happened, but could be both. I don't know. I mean, there may be a ship named Evergrande, but I know that the Chinese name was Evergrande too. I think it had an E at the end of it, but yeah, I never heard about that. Ship stuck in the canal. So, but there's what I think we're headed for is if the dollar continues to go down and the commodities do increase, if is the big question. And we'll do that. We'll go look at it here in a minute. This is the other thing that we have to look at is, commodities also have price shocks, just like stocks do. If they come out and have bad earnings, if they have, for some reason, they, whatever happens, Triple M, MMM, they got hit with the lawsuit, multi-billion-dollar lawsuit from guys in the military that lost their hearing because their hearing aids were defective. So here they are out, exploding things, and the hearing aids, they've lost all their hearing because the hearing aids didn't work the way they're supposed to. So they've had a huge lawsuit, lots of legal problems for Triple M. But hurricanes, floods, right? Earthquakes, droughts, obviously, if you're talking about corn, that type of stuff, oranges, if there's a freeze in Florida and the orange crop is destroyed, what happens to oranges? Boom, orange juice spikes in price. Because obviously it's going to cut supply a bunch. And if there's the same demand there, then it's obviously going to have an effect. So we've got to take into account what's going on with them. But there's the question, and this is getting back to the copper thing, is can we use commodities as a leading indicator? I've never been a big fan of the term leading indicator, just because it's virtually impossible to lead human emotion. I mean, we can see it in action. We can see it happening, taking place at the moment, right? But we can't really lead it, right? We can know from history in this type of situation, here's what's likely to happen, but it doesn't mean it's going to 100% of the time, right? I mean, human behavior is very predictable. At the same time, it's not. That's what's weird, right? So, but like I was talking about copper earlier, if copper is going down in price, then it typically means the housing sector is struggling. But then again, you got the whole EV market, which could be shifting that whole thing. And that's where things can change. If they start using certain things in a new industry, I mean, electric cars, they've been around for a long time, but not in a mainstream fashion, right? And all the different stuff that they're using in those cars obviously are commodities, and they will affect those specific commodities prices. So copper having been used mostly in housing in the past, now if it's being used in EVs at a big level, which it sounds like it is, that obviously changes the demand for that particular commodity. So now it changes the analysis we have to do. So we've got to take those factors into account as well. We got geopolitical factors. There's all kinds of stuff. Politicians make decisions to do certain things, and sometimes it affects commodities. So we have to look at, we can't just, it's not just a static thing. You can't just say, well, if copper goes down, that means the economies get weak. You can't say if gold's going up, the economies get weak. You can't really say, you can say that gold is the hedge against inflation, but at the same time, I think it was 2008, I believe, when the market crashed, gold crashed as well. Gold actually mimics the market a lot of times. So it's not necessarily a direct correlation. So you have to look at a lot of different factors, right? Oops. So let's go look at some charts now. This is where I've been playing. So there's the dollar index, right? And let's see. So it's been tracked since, looks like the late 80s. When was that? Mid 80s, 85, 86. And there's a lot of different ones in here. If you're using Omega charts, there's a ton of different indexes in here because they're futures, right? So the futures expire just like an option expires. So they roll the contracts, and you want to find one of the continuous ones. It'll show you a continuous. So they roll the contracts each time they expire into the new one. So I'm not that familiar with how it works technically. All I know is that this is the chart of the continuous US dollar. And you can see, I mean, obviously there's the pandemic hits, right? You see that there's a huge drop when the pandemic hits. Everybody panics and just sells everything. I'm going to cash. And then it turns to just spikes and goes crazy to the upside. Finally settles in and then drops off pretty much all of 2020. And then 21, the dollar increased from, we were down here at 90 all the way up to 115. And we go to weekly, it's a little longer time frame. So there's 2000. So there's that's not even the dot-com bubble. There's monthly. That's a little too much. Can't get more with that though. Wish there was an in between, but oh well. So the dot-com bubble started to burst right here in 2020 or 2000, right? And it continued, the dollar continued to rally, and then all of a sudden it crashed right along with the market. And then stabilized in 14. Obviously, we had a huge rally. Then it basically just been dancing between 90 and 102 for the better part of, a decade almost. And then in 2020, I mean, there's this right here is the COVID crash. So it sent the dollar plunging, and then it double bottomed and then took off and rallied big time. All the way up to 115, or 112, 114, something like that. Which wasn't that far off the all-time high of about 120, 122. Now, here's where it can get interesting. We'll leave that there. So I went and pulled a bunch of these different commodities. You can go in here, and if you want to go play in here, that's really it was really interesting because I haven't done this extensive of a look at this. So it was partly, this was done. I did this mostly for myself just because I was curious to see how it played out. But you can go to all futures. If you're using Omega charts, go all futures. And this has, there's 5,545 symbols in there. There's ethanol, soybean oil. There's the Brazilian real, Bitcoin, corn, cocoa, cash settled butter. These are all traded commodities. It's kind of interesting. I didn't even know butter was on the list, but apparently butter is traded publicly. It's traded on the futures market. Crude oil, cotton. A lot of these are, there's the Nikkei. A lot of these are currencies, right? There's the E-mini, S&P futures, feeder cattle. And some of these, I have no idea what the difference is. I mean, look at oats, French bond oats. There's 10 or 12 different types of oats. Cash adjusted, there's a continuous, I'm not sure what EXP is, expiring. So these are the continuous contracts. These are adjusted contracts. Australian pound, the Canadian euro, Zealand, Japanese yen, Swiss franc. There's gold COMEX. See, there's a lot of different gold indexes. So there's COMEX gold, there's gold COMEX. I don't know what this combined. So I have no idea what all these differences are between them, other than the fact that you can see their different expirations. So these are ones, if we look at, I'm just going to grab this one right here. That's a monthly, but if we go to daily, so this is, there we go. So I'm not even sure exactly how long futures trade for, honestly. Probably should ask Brandon. I'm sure he knows. But this one looks like it came out in 22 or late 21, early 22. But it will expire in October of 23 of this year. So October of 23, this chart will disappear. So they put them all in the continuous, which measures all of them. So here's milk, continuous of milk. So we can go to well, there's weekly. So this has been going since, oops, wrong button. Oh, that is when it started. So they started doing milk in 07. This is a continuous contract. So even though we've got down here, here's one that expires in July. I don't know how long that's been out. So it's only been out for a little while. So it's a lot like an options chart, right? It only has a certain amount of time that it trades. The continuous, though, combines them all together. And how they do that mathematically, I don't know. There's some mathematical formula for it. So, but you can go in here and play and look around in a lot of this stuff. But I put together a list here. Some of them are duplications, but because I wasn't even certain. So we got the dollar on there. So now if you hit C for comparison, if you use it on mega charts, this will give us a comparison chart. And you can do several different ways. You can have it show up down below. You can have it, I want it to overlay in the price pane. And don't really, well, whatever, that's fine. We'll take the Dow Jones. That's the Dow Jones Industrial, which isn't really what we want. But where's I had oil in here somewhere. I know I have the oil sector index. I guess we'll start with that. And this is where we can start looking. And a lot of this is just visual analysis. See, that's an index. I don't like that because it's going to, it continually gets moved around. Where's the actual, I don't want heating oil, gas oil, gasoline, natural gas, Brent crude. There we go. And notice one thing that I wanted to stay consistent was the contracts I grabbed. You notice they all end in 0.55. So those are all the continuous. Actually, let me make this a little bit wider here. Why there's a delay in this. These are all the continuous first. Again, I'm not 100% what that even means, but they're all the same, basically. So, but what you can see though is, that's the DJ. Oh, that's right. I got to do that. Take the comparison off. I need to make the comparison with the dollar index. Okay, so now the comparison. So the purple line is the dollar index. You can see right up here. It's DXO 55, which is right there. It's the US dollar index. So the other 055s are the ones that are the same thing. But when you look at oil, right? So here's Brent crude. And you can see, look at all the peaks. And you go all the way back here, that's 08. When oil took off and rallied like crazy, the dollar was down. I mean, there's almost a direct negative correlation. You look at the cross where here the dollar is rallying big time and oil is just getting hammered. This is in 2012. And then you got the peak there. Dollar starts to go down, oil starts to climb. There's 2020. Here's where it gets interesting, right? So here's the pandemic right there. That last line I just drew. That's when the pandemic started. That's April of 2020. So the dollar, the purple line, started to tank. So did oil. But then oil turned around and rallied. So did the dollar. I mean, I don't see any other time in this chart except for maybe a couple. You got a little bit here, but the black line and the purple line are both going north, which is extremely unusual. It almost never happens. That's why when I asked earlier, is anybody else finding this market weird? And the more I look at this, the more I realize that there's a lot of goofy stuff going on that's not historically normal. I wouldn't be surprised if in 20 or 30 years we look back at this time and there's going to be something crazy that has happened. There's going to be something nuts that took place from all this insanity. You got this tons of money pumped into the system, and it's almost an economic experiment that probably, in my opinion, I don't think is going to turn out well. I think in the end, it's going to be pretty ugly. I don't know that, but well, I do. Eventually, that's going to happen. Will I be alive to see that? Don't know. It always does, right? Historically, people eventually destroy themselves. It's just crazy, right? Central banks have pretty much always gotten it wrong throughout history. They always screw things up. They go the opposite of the way they should, and eventually the system implodes. So, and that is eventually what's going to happen here. The question is, how long will it be before that happens? Hard to say. What's going to happen? That's the billion-dollar question, right? So the question becomes, and you can see here, and this is 06. I know, doomsday. I know people are like, you're so negative. And it's like, I'm not negative. I'm realistic. Because it has. I mean, I don't even read a ton of stuff about history. Enough to know. I like to watch a lot of stuff there's a lot of history stuff on YouTube. But the financial markets, I've read a lot of history about the financial markets. And all you have to do is go read the book. What is it? Jekyll from, gosh, how come I'm drawing a blank on it? The Jekyll from, I'm looking real quick on my Audible. Where's my Audible at? Creature from Jekyll Island. That's it. The Creature from Jekyll Island. Go read that book. If you haven't, go read that book or get on an audiobook. It's long. It's like, I think it's 24 hours. It took me a while to get through it. It's pretty heavy too. But there's a lot of history about the financial markets, and even a lot of history about wars that have taken place and how the Fed and how the geopolitical circumstances brought it together. I mean, there was, what was the, I want to say the Lusitania. Is that what it was? There was a big old ship that I think the Britons built. And the theory is that they put a bunch of U.S. civilians on it, and they literally intentionally put it through the canal or the channel of water where, I think it was the Germans. I'm trying to remember all the history of it, but basically they sent this boat at a very slow pace right through the canal where it was dangerous and it could get shot out. And they did. Torpedo came and took it out. And it sank. Like super fast sank. Like in an hour or two or something like that, if I remember right. It was just crazy. And 180 Americans were on it. And they all died. And everybody died. And the theory is that Lusitania. Okay, I got that right. That might be the only thing I got right. But yeah, it was one of those things that was the event that drew us into the war. And there's theories out there that say that the Britons, I think it was the Brits, Germans. Yeah, the Germans said it had munitions on it. And there's a, they say that when you look at the ship, because it was supposed to be a passenger vessel, but in the base, it sounded like they put a ton of munitions in it. And they're saying that the hole in it was actually blown out, right? If a torpedo hit it, the hole would be inside, right? Like this. But if your munitions blew up, so it could have been both. It could have been hit with a torpedo and then it exploded, or maybe it never got hit with a torpedo and they exploded it. But they're saying they sabotaged it intentionally to draw America into the war because Americans were on there. So you kill 180 or 160 Americans, we're going to get sucked into the war. So I don't know. And, that's the theory. It was interesting. Let's put it that way. Look at a bunch of you just started putting comments. Obviously, I hit a nerve with somebody. I wouldn't disagree with that, Karen. I can see that too. I'm with you, Kevin. I think we're headed for a giant crash. I think we're headed for a Great Depression style crash. Now that some of you were saying that, not that I wouldn't have anyway, but and so it's not necessarily one of those things where some people get mad, like, you know what? Prepare for it. It's better to be prepared than to not be prepared for it. So if it happens, then at least you know how to handle it, and you know how you can deal with it, and you can make it through, right? Yeah, that's the old quote. Those who don't know history are doomed to repeat it. And unfortunately, there's not a whole lot of history being taught anymore. So right off of Ireland, that's right. Yeah, Oppenheimer. I know. I'm going to go see that probably. It comes out the 21st. I'm not a big movie goer, but I did just go see Sound of Freedom Saturday night. And it was spectacular. It was an awesome movie. Awesome movie. And now that I didn't even know Oppenheimer existed, but I saw it there at the theater. I was like, oh, that looks good. So I might go back and see that. Yes, war is big business. So, and it is an economic driver. It's one of those things. If the economy gets worse too, and that will most likely be what happens if the global economy gets negative, somebody will start a war, because then what do you have to do? You have to manufacture all this stuff to to do the war. It's cynical, but it's the sad reality of it. So, but yeah, and AI. That's another thing too, and that's the other part that I think is creating some weirdness is. And I've fiddled around with AI, and there's some people that are, I was kind of back and forth between, it's super powerful. It could do some really good things. It could do some really bad things. But right now I'm seeing it, unless something changed in my mind, I've finally come to the realization. I think it's the dot-com bubble, and not necessarily bubble, but it's the dot-com thing all over again. Because in the late 90s, early 2000s, dot-com was just, oh my gosh, it's going to change the world. It's the greatest thing ever. And that's what drove the massive rally into the late 90s up to 2000 before it crashed. All of a sudden people go, wait a minute, maybe this thing's not as big and powerful as we think it is. Maybe it's not going to produce these massive profits in these companies. People were buying companies. They didn't have any profits. They barely even had an idea. They weren't making money. And there wasn't any realistic chance of them making money in the near future. And it'd be interesting to see how many of those companies are no longer around. I mean, how many came out then and went public that were these big tech companies, and then they just died, right? I mean, eventually, the dot-com stuff caught up, and 20 years later, that's what I think AI is. I think the excitement around it is overdone at this point. I think the fear is overdone. But I think it could be super powerful. It could do a lot of really good things. I think it just depends on how we use it, right? It's like anything. There's good and bad in everything. I mean, you can get a knife out to chop up vegetables, or, it sounds terrible, but I mean, tools are people, and everybody wants to get rid of guns. Well, hammers are used to kill people more than guns are. Something like that. There's all kinds of things that kill people way more than guns. So anyway, I don't want to get into politics, but so it's a crazy world. Let's put it that way. Yeah, exactly. Depends on who controls it. It's like anything, I think. And people say that about money. People love to say, "Oh, money." What's the saying? It's not the real saying, but people twist it. Money is evil. Money's not evil. The love of money is evil. But money is an inanimate object. It does nothing. Just like a hammer or a gun, it does nothing. It absolutely has no value whatsoever. If I take my wallet out and put $100 bill sitting here on the table, it's just sitting there. It's not doing anything. Money's a tool. And like any tool, whether it's a gun or a hammer or this or that, if you put it in the right hands, like Brett said, if somebody controls it, that's good. It's like what I've always said about money. Good people with money in their hands will do good things. Bad people with money in their hands will do bad things. That's just the way it is. The inanimate object has nothing to do with how it's used. It's the person and their heart and their head and their mind is what determines how that tool gets used, whether it's money or a hammer or a gun. I don't care what it is. So, I mean, Karen Dale, it depends on who controls it. So, yeah, money makes a person more of what they already are. So if you're a good person, you should work your tail off to make more money because you'll probably do good things with it. If you're not a good person, don't try to make more money because you won't do good things with it, right? So it's all about where your heart's at. So you can see there, though, but there's what's interesting is a lot of the commodities, the dollar index, getting back to the subject, right? The dollar index has rallied and the commodities have rallied too at the same time, which is highly unusual. Let's look at some other ones here. Here's corn. And a lot of these are just going to look and see. And this is pretty similar in the sense that you can see here where, I don't know what was happening there in 08. Oh, that's the crash. So corn took off and rallied big time. The dollar was weak. But then it rallied again in, what was that, 2010? I don't know if there was a drought or something. What happened with corn? I'm not sure why corn was so high back then, but it is, in a lot of ways, it's kind of the opposite. The dollar's low here and corn stayed high. But when the dollar started to rally, corn went down in price here, right? And then from this period, it went the same. Here's, again, the dollar is dropping off, corn's rallying. So the dollar gets weak, commodities go up. Except for in 2020, the dollar goes up, commodities goes up, which is unusual. Most of this rest of this time, what is that, 16, 17, 18 years worth? There's a negative correlation. So they do the opposite of each other. Oh, here's the Bloomberg Commodity Index. This is a Bloomberg put together this index. It's an index of, I can't remember what commodities are in there. I can't remember how broad it is. I think it's a pretty broad index though. It's one they talk about often in the news, right? It's one a lot of people use to measure. And you can see that there is a pretty much an opposite correlation, a negative correlation. So there's the peak of 08. Dollar goes up, the purple line goes up, and the commodity index tanks. I mean, they're almost exactly the opposite. And then you got the turning points are almost the same. Dollar starts to get strong, commodity index gets weak. They go sideways, dollar index gets strong. Or the purple line, the dollar index in 2020, 21 gains a lot of strength, and commodities also strengthen. And now they're headed back down together, which again, it's highly unusual. So it's definitely weird. So how does this resolve is the question. Because, right, what do we do? I mean, this is interesting information, right? I find it interesting at least. But how do we utilize it? How do we take advantage of it? And this is all macro picture, right? So it's bigger picture type of stuff. So in the short term, it doesn't have much of an effect for us right now. But at some point, okay, just like with regression analysis, right? If you do regression trading, where when something gets too far away from the norm, it almost always retraces, or it stalls out enough for the norm to catch up to it, right? The norm is for the dollar index and commodities to be negatively correlated. And right now they're positively correlated, which is, again, it's unusual. So the question becomes, when does it get back to normal? And how do we take advantage of that? And that's a tricky question, right? Hence the reason that, I mean, most of you probably trade short term. That's what I do for that reason, because trading long term is, well, it's easier, but when you have something wonky going on like right now, how do you get into something? And we've rallied so far in so many of these stocks that it's hard to justify getting in because the valuations seem pretty high. So, oh yeah, Tesla's on Wednesday. Yeah, I'd like to believe that, Karen. Last earnings season, I was thinking the same thing. And then it was just a really mixed bag. You had some companies were coming out and reporting really good stuff, and they jumped. And then other companies, big name companies, that were coming out and getting trashed because they were saying things are awful. So, and I don't know what to expect this earnings season. So, which we're not in the business of predicting, right? We're in the business of waiting to see what happens and then, make a move from there. Generically speaking, sometimes it's fun to predict and have fun, but there's cocoa. That's actually, interestingly enough, that is pretty negatively correlated. It's not as dramatic as the others, but then there are periods here in October of 2020, they both rallied. Or at least it was back in before 2010, it was pretty negatively correlated. Crude oil, this you can see obviously is negatively correlated. There's the high there, the highs and the lows pretty much. You're getting a big rally right there. They're going opposite direction. Here's the opposite, but then here you go again in 2020, they both started going the same direction. And right now they're both going the same direction. Yeah, you and me both. That's why I'm fully on the sidelines right now, other than I've got some long-term positions that are bearish, that are basically hedges against the crash. I don't say hedges, but they're sitting there waiting for it to crash, I should say. There's cotton. I don't know, looking at this, it's pretty negatively correlated. You've got some of these, when you look at some of these peaks, you got the dollar index is at a high and the cotton's at a low. Same thing with there in the 08. Commodities went crazy in 08. Even though the dollar went crazy here and cotton went down. Cotton's not super volatile, so it doesn't look as dramatic, but you can see the lows and highs are pretty close. But again, there's 2020. They're both going north. Cotton's got hammered big time. I wouldn't be surprised to see this bounce. And if the dollar continues to fall and cotton continues to climb, then we'd go back to normal, right? We'd go back to a negative correlation. Because realistically, if the dollar's dropping, then cotton should head up. That's a good point. I hadn't thought about that, Les. Cocoa. Did we look at cocoa? I think, yeah, we did briefly, but Yeah, in stressful times, people eat more chocolate. I know that's the case for the ladies, right? Ladies love chocolate. I like chocolate too. I'm not saying I don't, but it's just one of those things. Lean hogs. That's what I thought, Brenda. I was waiting to hear from you. I mean, I did meet somebody recently that doesn't like chocolate, and I was stunned. It's like, how do you, I don't know how you don't like chocolate. I'm just not fanatical about it like some people are. So, yeah, let's see. That's hogs. Let's try to get some. There's gasoline, and that's a lot like oil, right? But again, you can see recently it's been directly correlated. Kerosene. That's pretty much the opposite. Historically, you look at the peaks and the valleys, and when one tanks and one rallies, they're pretty much the opposite. When they make an X like that, or they make a big, I don't know what you call it, a big open mouth. Whoop. OJ. OJ doesn't seem to be anything. I don't see any correlation there at all. Coffee, one of my favorites. Yeah, there's a little bit there, but it's not dramatic. See, some of these you can just look at and tell that they're yellow maize, white maize, corn, copper. There's copper. I was looking for that. Oh, that's the mini one. There's another one in here. Platinum. So I was talking about precious metals earlier. So there's platinum, right? Because gold and silver, generally speaking, are the opposite. So platinum, you can see that there's a negative correlation there. And it's actually stayed down while the dollar rallied. So but it hasn't rallied while the dollar's been dropping. Interesting. That's the first one we've seen that hasn't rallied in the last year or two. First commodity here. There's silver, same thing. Silver hasn't really, which makes you wonder, are silver and gold going to take off? I mean, look back here to 08 when silver just went crazy to the upside, which made sense, right? We were going into a recession. It's a hedge. Hey, take off. And we've got the beginning of rally here, but it's just still just kind of chopping around here for the last 2, 3, 4 years. So if the dollar continues to fall, does that set up a possible catapult for silver or gold? Where's our, I don't want the E-mini gold. Where'd the gold one go? Which I think could be the case. We saw a little bit of that. There it is, COMEX gold. And gold stayed elevated up here with the pandemic. It didn't really drop off a little bit, but the dollar rallied, gold stayed pretty solid. Jamie Dimon of Chase shorting things. Did he say that the other day? I read a couple articles of some of the comments he made, but I don't remember that. I would be shorting things too. I'm waiting for a bearish pattern to show up, and then I'll load up on some puts. So, but it's earnings season. It's a little crazy and chaotic, and like you see, I mean, for the last 3 or 4 months, maybe 2 or 3 months, I've had very few positions on. I'm just waiting for some kind of indication of what might happen next. It's just so chaotic. So, see, that's interesting. Gold though is right up around 1958. That's exactly where it's at right now. And it bolted above 2000 just for a little bit. But this almost looks like a kind of a windup, and I wouldn't be surprised to see it break. If it breaks these highs, who knows how far it's going. It actually almost looks similar to back here, just before the 08 crash. I'm curious now. Let's take it from the top here. I don't know if you can see through that purple. We got to wrap up here anyway. So I'm gonna get rid of the dollar index. So we're gonna finish here on gold. Looks this little spot right here. Yeah, if you have any other questions or anything, drop in there right now, because I'm gonna do this and then finish up. Just knows we're out of time. So we have a big rally, and then it kind of dances around for quite some time, right? This is March of 08, which is the 08 crash, right? And then stabilizes. So that's about a year and a half's time. It doesn't look a whole lot different than this, does it? Looks very similar to that. And I'm going to change this to percentages. Just out of curiosity to see. Come on. And sometimes this is, I do this not only for fun, but sometimes it kind of opens your eyes. You go, whoa, wait a minute. Show length in bars. Do this too, show length in bars, so it'll show me approximately how long they were. Duplicate it, so the setup's the same. Drag it over here and see kind of from the lower spot, maybe. Oh, we should have it right about there. Looks a little bit, oh, wait a minute. We need this to the breakout spot over here. That's where I did it there. So if, because that looks similar, does not? You look at inside the boxes that I just drew there. In fact, let's get rid of that. We got a big move and then a dance around for a year and a half, 2 years. And here we've got, there's 8 of 2020 and here we are 23. So it's a longer period, but it's kind of, it's almost like a spring winding up, right? And if that spring snaps, you know, if we have a, trying to figure out where a target would be if we break above that level, how far, and I'm going to have to put it here because the angle of that thing. Interesting. So let's say it breaks out right above that level, that it's well, yeah, we ran 88% here. Oh, wait a minute, that's interesting. So that kept it the same number. This is the gold, COMEX gold. So this is the futures. This is a continuous futures contract, which is, if you're on TOS, it's \CL, or GC. GC is gold. Yeah, and gold's at 1958 right now. I mean, live, I'm looking at TOS right now, it's 1958.3. So this is a chart that I don't think it's live. Well, it is technically live. It's 15 minutes behind. But so this is a continuous contract of the gold futures. But I just noticed that, okay, no, that is accurate. But if we go this one ran 88%. So if we run 88%, whoops, that's not what I wanted. Close enough. Well, yeah, it's almost a double. I mean, if we break out of 2000 and go to 4000, that's what happened back in the 08 crash. You got the 08 crash that happens here. Gold downshifts a little bit with the crash, and then it turns around and rallies. And from 09, what was that? October of 09 to September of 11. So for 2 years, it almost doubled. Very similar pattern, isn't it? I mean, they look almost identical, except that we had a pretty solid bullish trend there in 2000 coming up to here, where here we've actually been dropped down. Look at that inverted head and shoulders right there. Woo! It's not pretty, but well, it's multiple shoulders is all it is. But I mean, obviously it played out beautifully. So looks similar to me. So how do we translate? Gold, NEM, AEM, when gold popped back here, when it had this little double bottom. GLD would be one, right? That's an ETF, right? The gold ETF. If it breaks above 2000 and stays up there, if the dollar continues to tank, then it's likely the gold's going to continue higher. So gold ETFs, AEM was awesome when it came down here. When our gold broke above 2000, just briefly right here, there was a good week or two trade on AEM, on all the gold stocks. Actually, they all rallied. So look at gold stocks. The gold ETF, I think that's GLD, Brenda was mentioning. So something to think about. If you are buying stuff for longer term, that might be something to consider. Look at either gold itself or gold stocks. Right covered calls on them. It all depends on what you're looking to do. At Nugget, thank you, Les. NUGT is Nugget. We'll go to that and see what are they doing. It's been a while, but yeah, see, they've all rallied when gold ran 25 points that day last week. It took off and rallied. AEM is another one. Yeah, this right here, we had a double bottom on AEM. This is about when it hit 2000. That day right there is when it cracked the 2000 level. Gold did. I jumped on calls there and got in and out several times. And then I think it finally got stopped out here somewhere. But Those are fun. When you got a good pattern in place and then something like that happens, these are fun. That's probably the best trade I've had this year, actually, was this run right here. So are we set up for another one? Possibly. Another little double bottom. So, wow. Yeah, that's the second rally I jumped on right there. Ooh, but earnings is coming up. That's the only downside there. So watch out for earnings. NEM. Whoops. There's NEM. I haven't looked at this one for a while. It's been kind of stagnant. It's just sideways. There's not much going on with NEM. I don't know why it's not going. So, again, something to think about. So, any questions real quick that I either didn't get to? I think I caught everybody's. Yeah, go ahead. I'm just seeing your mention there of cocoa again. That's the yeah, if the economy starts to get worse, which it's already getting bad. It's a question of, how bad will it get eventually, and how much will the market tank? How much will all the asset classes? Because real estate's overpriced too, as far as I'm concerned. With interest rates where they're at, I mean, in this area, a starter house is $4,000 a month. That's your mortgage. You get a $450,000, $500,000 loan, you're at $4,000 to $4,500 a month for a mortgage. You got to make 120 grand just to get by, just to make your mortgage payment. You got to make 100 to 120 grand just to live somewhat comfortably. So it's I just think it's a little too crazy. But yeah, retail numbers tomorrow. Thanks for the reminder, Karen. So we will see how that comes out, see if it affects things or not. Seems like the data has been pretty mellow lately. There's not been any huge surprises. So we shall see. It's always a surprise. Everything is a surprise, right? That's one of the beauties of trading, is it is challenging. If you don't like a challenge, you're definitely in the wrong spot. So, but anyway, all right. Appreciate y'all coming out, having some fun, and we will see you. Not sure if we'll see you doing this one again, but definitely see you in Trading Coach's Playbook or Weekly Whispers or Patterns of Flash, whoever has those. If you don't, jump on the trial and test them, see if you like them, and we'll see you. We'll see you all down the road. All right. Y'all have a great day. God bless. Bye-bye.